Have you ever wondered why so many successful traders go into the market with actually some kind of bias and trade idea, right? Trade plan. Even with a bias, there's obviously certain things that we do have to take into consideration, but this is why they're successful traders, because they do this so well that the bias is okay to have. Hello traders, it's Victor from TRADEPRO Academy, and I hope everyone is doing well. In today's video, we have a super exciting lesson in how to actually create a trading plan before the market even opens to day trade futures. Now, here's an example of exactly what I mean. Every single day in our trading room, we have a plan. We create a plan for our traders and ourselves. This plan involves a somewhat of a directional bias with, of course, very key levels where we're bullish or bearish above or below. So in today's example here, you can see it up on the screen from the screenshot. We had a bullish bias for a run throughout the day. Now, there's multiple reasons as for that. You can read the screenshot yourself, but what we wanted to say was 3977 was a key area on the S&P based on recent trades and overnight sessions. This is an area where I want to try some of the longs to see if we can hold out. Now, the final level for the longs is 3971. Now, if you take a look at this day, right, December 12th, it was actually a mark of the low before we had a 50-point rally until the close. Now, the target of this move was 3990, where we expected some kind of stall, and we did. So, how do we find these levels? How do we find these key areas? This is the video for you. Now, 3990 was a huge pivot on the day, where above we would expect this massive monstrous rally, which we saw into the end of the day. This is how the day shaped out. So, without further ado, why don't we jump into this video? But I want you guys to comment down below. Do you guys have a trading plan? If so, what goes into your trading plan? Do you have a bias? Do you have something that you're looking for? Let me know. Otherwise, like, comment, and subscribe. And also, if you want trade plans like these and ideas like these, you know where to find us in Discord. Check out TradeProAcademy.com. So why don't we dive into this intro and get ready for this. So in today's video, we're going to be using a few different things, right? We're going to be using TradingView and Sierra charts, two different trading software. Now, TradingView is great because it gives us a larger scale image of what's going on in the market, right? You can use a continuous contract on the S&P 500, which are the futures that we're going to be trading. And you can look at this continuous contract that gives you data for volume for eternity pretty much, right? Because contracts, they do expire and then you have to roll over and the volume profile doesn't reflect it in certain softwares. So TradingView, that's going to be where we're going to be looking at our continuous contracts, and then Sierra chart is where we execute and look at more minute volume profiles. But in order to give you a step-by-step and break this down for you guys, we're going to have to jump into the screen and look at these charts on a screen. So I'll see you guys there.
All right, traders, welcome to the screen here. This is what we got. We're going to be looking first at TradingView. Obviously, we're going to be looking at TradingView and Sierra charts. And we're going to go step by step here, right? Step number one, what we're going to identify here is we're going to look at the large volume profile to identify where the key distribution blocks sit. And TradingView can really help with this because, again, remember the continuous contract. So we can get the information and the value from the longer volume profiles. These are going to be huge levels of price where we're naturally going to ideally respect the ledges of the large volume profiles as rejections, right? And then we can also respect them if we do accept within them. We're going to have to take a look at the larger volume profile here and kind of break down what has been going on to create the actual distribution blocks themselves. So if you're newer to distribution theory, please go check out some of our other videos here on the channel. But let's go step by step here, right? We zoom out. The right-hand profile here is going to show us all the data that comes from the sessions that you see on the screen. So whatever is visible, you are going to see data based on that. So step number one, we're going to be taking a look at what the large distribution blocks are, right? So we can circle these distribution blocks as these bellies you can see right here. And with that, you have ledges that create the outsides of the distribution blocks, if you will. So these are going to be the main points of contact that we're going to be interested in here. And these are going to be the premise for the large levels on our daily trading plan. So very simple, right? We have 6 main levels here that we can mark off. So why don't we do that just now, right? Like this, like this, like this, like this, right? Like this down here, and at the bottom here. So the key of all this is that we want to make sure that our levels are huge, right? Very, very massive levels that we can kind of draw attention from, that have been traded multiple times over, that actually sandwich these distributions, right? This is what we're going to be doing on a 15-minute time frame here on TradingView to kind of give us an idea of what our general large areas are going to be. So to quick overview of distribution theory, when we have big blocks like this, you can see this is the largest, fattest belly. And when price is outside of this distribution, price is considered to be outside of value. And it wants to stay like that, meaning that the top of that distribution is going to be a very key support. So like we said, 39.71 is the last chance for the longs to pick this up. Otherwise, you're going to see a pretty strong push into the distribution, which would take us down to 39.52. So with that, we have multiple levels here. So our 6 key levels that we have are going to be 39.52, 39.70 to 72, right? We can use a 2-point discrepancy there. We also have 39.76. We can say we have 39.82. We also have 39.90 and then 39.96. So those are going to be our key areas that we could play off of. Those are going to be our main points of interest. We have 6 levels right there, and we don't necessarily have to go too much further, but we want to be a little more exact. We want to be a little more precise. So that's exactly what we're going to do. So when we have these key levels, naturally they're going to be made up of the ledges of the larger profile. This way we can have those mega key levels, and we can move over into step 2. Now, step 2 requires us to check the overnight session, right? How did volume shape up overnight? Is there a small range or a wide range, right? What does the volume profile for the overnight session look like? Because you know that the futures are split up into 2 sessions, ETH, which is extended trading hours, and RTH, which is the regular trading hours. But before we dive into that, I want to take a look at this and identify what we can say as the kind of pivot area, right? Where are the bulls versus bears stronger? So there's no necessarily right or wrong answer, but the 3170 region, right? That's a very distinct area where we know that if we fall below, we're going to be entering the distribution block to the downside. Now, another very key distinct area is the 3990, because it splits up what is a new pretty large volume profile that shapes up all the way up to 96. So we know that the bears are still kind of in control if we don't break that 39.90, right? But the bulls are still trying to hold out above the 39.71. So with that said, right, we have our key levels here. Why don't we dive into what a smaller profile would look like? And that's where we open up Sierra charts. So with Sierra charts here, right, what we're going to be doing is we're going to be looking at the overnight sessions as well. Now, the overnight sessions, you can see right over here, this is what the overnight session is from this start to this start right here. And it's going to be a longer time period than the regular trading hours naturally. Now, what we could do with the overnight session is start to identify, okay, where are the key distributions within the overnight session? Where's the value of the overnight session? So we can do this fairly easily, right? We can clear all this data and we can say, you know what? Okay, there's a very big distribution block that sits like this, right? That's a very key distribution block. There's also another key distribution block that sits like this. So what is the meaning of this, right? What is the value of this? Now, generally speaking, when we send distribution blocks, right, the lower band of the distribution block is going to want to hold if price is to hold within the distribution, right? Correct. And the top is expected to hold if price is going to hold within that distribution. Now, we can say the same thing. When we're outside of a value area, right, when we're in a low value area, price does not want to enter, right, that new balance, because there's a lot of volume there. It's going to really take something serious to get through that area. So that means that this area is expected to bounce. Now we open within this nice key distribution block here, meaning that we would ideally want to sit within it. That's why I was thinking, hey, you know what? 76, right? Doesn't look like a bad long, so we can go and try that 83 region. Now, you can see how well that 83 holds to keep us within this distribution block. However, we do manage to break this 71 or so, and then we actually hold it for that next continuation. So what I want to say is the overnight session, right? You can see where the key distribution blocks for the overnight session are. You can plan a trade based on that. If we open within some of the overnight distributions, right, the expectation is to hold within them, and a break through them is going to open up that extended move. Now, we can take this whole period right here, right, and look at it as that we have again, just very, very key areas that we want to play off of. And we know what the activity off of those areas is supposed to be. By that, I mean that you know that if we split it up like this, let's say, right, let's do this again. If we split it up like this, we know that longs should come in at the bottom of the distribution, shorts at the top, and long should come at the top of the test of a new distribution block, right? So that means that if we escape the top end, we're going to be opening up the skies for that aggressive pop. Now, we're going to be combining both the overnight session and the larger profile session to come up with a better area, somewhere closer to 39.88.90 as the area where the key explosion will start for that propelled move, which is exactly what we get. So even if you're not trading that low 70, you know, okay, if we break above this 88.90 and we actually hold its support multiple times here, this is going to make for that large extended move. So all in all, to kind of surmise this, right? Let's take a little summary of what we have going on. We understand that from the value areas of a larger profile, we can identify and discern the very, very key areas just by understanding how distribution theory works, right? In a massive, massive market where that has larger moves, we can identify 5 or 6 very key levels, and we know right away what the directionality off of those levels is. Now, after that, we want to go and look at the overnight session of the S&P 500 in this case that we're taking a look at, and take into account what the value areas and distributions within the value areas of the overnight session look like, and those can help us out with the directionality as well. So with that, what we've done is actually create a trading plan even before the market opens, even before we have the data, and is just as easy as that. With using the volume profile, we understand exactly what's going on and why it is happening. So let's keep that in mind. And that's exactly how we do it. If you want more information, you can come check us out at TradeProAcademy.com, where we paste these trade plans every morning and break them down for you every morning with some guidance throughout the day. So if you don't have a trading plan, this is your new trading plan. Go check that out. Try that out using the volume profile, and let me know in the comments how it goes. With that being said, I want to wish you guys a farewell. We'll see you in the new video that's coming up, and I want you to smash that like button and that subscribe button. So stay tuned for more videos like these, and let us know what else do you want to see.